Good morning, everyone. We are back after a long weekend. Hope you all enjoyed that new federal holiday. I know I did. Got some R&R, and we're back to work. So, all right, got a few things to look at. As usual, we start with the indices QQQ SPY. Now, this is where it gets a little bit tricky for me. I've been calling for the 200-week moving average for about 3 months. Okay, and now we're pretty much there. You look at the QQQ, you could see it um, right here. Well, take a look at this 200-week moving average. You can see it didn't exactly touch it the other two times it was near it, just above. So we're just above it today. So I'm not going to insist that it has to touch this line in order to get a bounce. Now, it ended up that we were still in a bull market in both of these challenges of the 200-week moving average. Okay, so could it be that we're still in a bull market? And remember, the way to differentiate whether we hold that 200-week moving average or not is whether we have a fundamental issue in the economy, something systemic that could take years to fix, like we had with the dot-com bust and 2008 financial crisis. Only other time it breached the 200-week moving average, if you recall, was the COVID crash. Well, no, actually, look, COVID crash, it even held it. But on the SPY, it actually went below it. You could see over there. Now, the SPY has been touching that line. It breached it here. It's a little above it here. But the point is, I think between this chart and the QQQ, we don't necessarily have to insist it's going to touch that line. Now, does that mean this bear market? Think so. I just think this is your challenge line. This is your support line. This is where you can bounce off and potentially have a longer period of support, or you could get a bear market rally ahead of the next fundamental shoe to drop, which could take us below the 200-week moving average and result in a multi-quarter or multi-year period of fixing up the economy. Now that's the worst case situation. Now, what could possibly derail that? I'm going to pull up. Let's see how oil is doing this morning. Let's see. All right, oil is up a little bit this morning, but okay. Here is the argument for why perhaps we may be near bottom, and it has to do with the fact that oil and other commodities were down last week pretty sharply. Because the whole premise behind, hey, we have a big fundamental problem. That fundamental problem would be stagflation caused by what's happening, but at an exogenous impact, right? That exogenous impact being war, Russia-Ukraine war, and also what China's doing with the COVID lockdowns. That's that exogenous impact, which could cause, typically you hear the cure to high prices is high prices, right? So when you have inflation, it self-corrects. But when you have these exogenous impacts, perhaps you're not going to self-correct those higher prices. Perhaps the cure to high prices is not high prices, and you get sustained high levels of commodity prices, which could really harm the economy. And that would be the argument, in my view, for breaking below the 200-week moving average and having a long, sustained bear, really. Now, last week, I think this is what the bulls are currently a little bit excited about. They're like, hey, commodities are down, is down. This is just a routine cycle that's going to be self-limiting. And again, the cure to high prices is high prices, and we can rally off this 200-week moving average and go from here. I'm not sold on that. I think potentially the pricing that we're seeing in the commodity markets is just speculators betting on just what I told you, right? And it's not a function of the reality of the supply issues of oil and the supply chain issues coming out of China. And perhaps we're going to go back to those high prices and sustain those high prices, even though earnings are starting to come down. So that's something you got to decide for yourself how to play. I will tell you that for me, right now, because we're near that 200-week moving average, this is the hardest part for me. All right. I've been imagining and warning about this for months on end. That was the easy part, right? Getting rid of this COVID excess and getting to this 200-week moving average test. I've been so adamant about it. Those who have been listening. Now that we're here, where do we go from here? That's hard for me. I don't know. Honestly, I really don't know. I know a lot of people. I've been assessing sentiment on social media. I've been looking at a lot of polls. A lot of people think this is a bear market bounce. I'm sure a lot of other people think perhaps the end of the bear market is here, but I'm not so sure, and I really don't know what it's going to do short term. So that's that. So I'm going to be focusing on specific stocks. I will say, though, that ARK-K, even though we hit new lows in Q and SPY last week, ARK-K held that 35.10 level, or was it 35.15? Doesn't make a difference, but 35.10. It held that 35.10 level, and that's something I've been talking about for a while. I forgot to check my audio settings, make sure we got the right microphone. We do. Thank God you can hear me. So, in any case, yeah, potentially I've been talking about, even though I'm bearish on the generals and Apple, or I could say at this point, I'm a little bit not sure yet, what's going to happen at this point, but the potential for the next shoe to drop being like something like an Apple or Microsoft missing earnings, guiding lower, right? That can take the SPY and the QQQ down, but could it be that the ARK-K and the risk assets, that their bottoms are already in? I think that's possible, which is why I'm aggressively stock picking. So let's talk about those stocks. By the way, Bitcoin, I don't know, those of you involved in our crypto room, I was pretty bearish on this, thinking we're going to drop below 20,000, get to about 18,000, what I thought was a key support level. And we did over the weekend, 17.5. I was actually very surprised how quickly it went back above 20,000. That's going to be something interesting to watch. If this bear market's over, we can run from here. But I'm leaning towards fundamental issues and Bitcoin going to like the 7 to 15,000 range. But I was quite impressed at how quickly Bitcoin came back and went over 20,000, and that to me is a leading indicator of risk and risk assets. And I think that was a harbinger what we saw over the weekend with Bitcoin, that ARK-K and other risk assets would do well this morning, and so far they are. All right, let's get into some specific stocks. VTSI, I still very excited about this. I know market, there's not a lot of money sloshing around for exciting plays, but I think when you look at this through the lens of the 4 pillars, it's too compelling not to go overweight. So I did take an overweight position last week, and I actually made this my play of the week on a show that I have a standing invite to on Sunday nights. I'm usually not able to make it because of our own show, but we had canceled that because of Juneteenth. So I went on this Twitter Spaces show last night, and there were, at this point, probably at least a couple thousand people who heard the show. And for play of the week, there were 30 picks, and my pick was VTSI, and I laid out the argument based on sentiment, catalyst, technicals, and fundamentals. So those of you who are in our community, you know all that. Real quick, fundamentals, 10 PE, 8 8 is the EV to EBITDA ratio. We have the catalyst of the CNN spot last week. We have the sentiment of the Uvalde school shooting. And we have the technicals, which is the 200-week moving average. You can see here right there that pink line that's holding. So I got an overweight position in this, and I think it could go. It's worth it. It's worth the risk, right? If it doesn't work out, fine. We're not like getting cut in half from here, right? This is a pretty good spot to buy. And if traders pick this up on the Uvalde school shooting theme, and Anderson Cooper gave it a great plug on CNN. So I'm still very bullish and excited about that overweight position I got in VTSI. We'll see what happens. Now, Drio, I'm not going to sugarcoat this. It broke below the 50 DMA last week. And this is my largest position, but I'm going to be honest with you. I'm not going to, sit here and talk my book. All right. Technicals matter. And I could tell you this drop from up here is a sentiment issue that some people think is fundamentally related, right? Sentiment, by the way, is just speculating on future fundamentals. But this whole move happened after they announced the $50 million debt offering. Debt offering, I don't know if that's the right word, but the $50 million loan they got is almost non-dilutive line of credit or loan. But in any case, I think some, based on what I'm seeing in social media, saw that as a sign that of trouble, because, well, the fact is most people did the financial models and they didn't realize that they needed to raise more money. I knew they needed to raise more money, right? I calculated with a colleague, we need about $35 million more to get to cash flow positive, and we're going to fill that gap either with an equity offering, some debt, or with a new partner like Sanofi. So they chose to go the debt route, which, I think is overall the smart decision to do. And, some people may be questioning the timing of it. Why do they need it now if they're about to get the national insurer? But even if they get the national insurer, they would still need $35 million. They needed the money either way. Yeah, the point was, could they get a better price better terms if they did it after the national insurer came through. And that's what some people are worried about. That's the sentiment that started taking the stock down. And now it's below the 50 DMA. And then you get momentum traders, you get technical traders, and that's what you saw at the end of the day saying, damn, we breached the 50 DMA, we go and we're taking it down. So could this go even lower? It could, right? Before things really turn around and we get more deals and we get the national insurer plan. Yes, but hey, this morning they got announcement of a new contract with a national employer, not a national healthcare plan, but a national employer. And that's pretty big news. So listen, I'm not playing games with this. Sometimes there's stocks I trade more often and more quickly and more tightly based on technicals. And there's stocks that I'm holding for a huge gain. And this is one of them. I'm holding this for a huge gain, multi-bagger play. So I'm not going to be cute with this if it breaks down to below the 50, which is what it did. We got that nice news this morning. So perhaps that's all we get, right? Perhaps technicals are going to lose when you get a catalyst like that. And that's why I don't play these games with this stock, because I know it so well. And we're getting catalysts left and right every other day with Dario. So I'm holding the line, but if it goes down, you can understand why, right? It's because it broke below the 50 DMA, and a lot of people watch a 50 DMA. And I told you about the sentiment that caused it to get down and challenge that 50 DMA, so you can understand the price action. Okay, let's take a look at a couple other stocks. I still am playing this as a swing, not a long-term investment, but CYRN. It's a cybersecurity stock. They sold part of their business for 10.5 million in cash, a market cap of only 17 million. The risk reward seems great to me, fundamentally speaking, sentiment speaking, the right sector, technicals. It's trying to break out of the 50 DMA, having a little bit of trouble here after it retracted. But based on the four pillars, I still like this. I'm still holding it. And I wouldn't be surprised if we get a second kind of pop out of this. I did sell some in the 290s, obviously not enough. Maybe about 10% of my stake way up here. That feels good. Didn't sell like 324. I'm like, I only got 290s, but now it looks good. But that was only about 10% of my position. So we'll see if we get another pop up to those levels. I think we could. So CYRN, something worth watching. Now, Kodak, one of my largest positions, I think pretty much tied with Dario up there, maybe second behind Dario. Vtsi, by the way, is third. So Kodak has had some really good action, and all of this action bucked the market trend. There's something going on. We could not find any nuggets, could not find any news in our Kodak research group, couldn't find anything on StockTwits. This is a big buyer with deep pockets, and I don't know the reasoning for why they're coming in. It could simply be that they finished their research and saw the same things we did, and now they're getting in. So look at the 200-week moving average. You can see it almost touched it intraday. Is that it? Is that as close as we get? Remember, I love these moves going from the 20 to the 50, to the 50 to the 200. Very, very reliable most of the time. So what happens from here? Do we break the 200 and go? I'm not so sure. So resistance is at 560 in case you're playing this tightly or trading around the core. That's your resistance level, 560. And interested to keep an eye on this to see if the buyers know something. Is there going to be some news coming out soon that can justify this breaking the 200 and moving higher? So that's something we're watching closely. Kodak. I mentioned UUUU last week that I added more on this retraction to a pretty low level. Man, these moving averages are nowhere to be found, are they? Well, you got the 200-week moving average. But anyway, we had some really good news the other week, and then it just died along with energy. I guess that's why it went down. It's following USO. But I love the long-term story here on uranium. I like that catalyst that we talked about with the U.S. government wanting to buy billions of dollars of domestic uranium. UUUU is a domestic uranium source. So I did add last week in the low fives, I guess it was. Lowered my cost average because I did get in this high. So I'm holding on to UUUU. I don't know if there's any specific catalyst causing this uranium to go up, because also CCJ is up this morning 4%. So could there be something out there? There could. I haven't had time to check on that this morning. So if you find something about why uranium is up, let us know in the community. The other stock I'm looking at is CFVI. I did note that around these levels, I thought it's a good risk reward because it can't really go lower than 10. Not right now, not pre-deal. Well, it could, but temporarily, maybe 980 is your bottom. I could temporarily touch that in a bad situation, bad market liquidation or something as a SPAC. But anyway, we're near the lows at 10, and a catalyst can take it up. There was some news release, and I haven't had a chance to read it. Took advantage of my long weekend, but Friday at like after 8 p.m., they dropped an S4 with apparently more details on the fundamentals and the value of this company. And I saw it was trending over the weekend on StockTwits. So I have a position in this in my IRA, and I do like. I don't want to say the fundamental. I like their growth in their metrics, their usage metrics, and amount of people using it, and the video views, and everything else like that. Make this look cheap, right? This looks potentially like it could be a $20 to $25 stock with its current usage metrics. The wild card here is recession, right? And how does that translate into earnings? And if we're going into a recession, right, the comps that you're looking at, like Twitter and things like that, may not really work out if earnings are continuing to drop, but they're growing so fast. Anyway, at least for a trade, if you want to go overweight, that's something I'm considering here at the low 10s on CFVI. A couple other things we're monitoring. You can see SMSI, Mogo, we're waiting for some news. Twitter, is that deal going to close? I do want to mention Chewy because I had mentioned here's another example of we break the 20 and we go to the 50. And I called this very early on. That hey, that the target's the 50. Oh, it's touching it right there in pre-market. There you go. You broke the 20 right there, 20 support, and now 50 resistance is trying to challenge it. They got an upgrade this morning, I believe a $35 price target. So look how beautifully that works. The difficult part is the timing, right? The difficult part is how quick it could go. And sometimes I get myself into trouble trading options on something like this because I'm so confident about these moves, and usually I end up being right. That sometimes I take too much risk. I get a little full of myself. I'm like, all right, let me try with options. You get the timing a little bit off, and your options expire. Boom, you're screwed. And also, just trading options very difficult, very emotional, hard to control yourself there and do the right thing with options. So I don't recommend it. I never talk about it really in the community because that's just something I do on the side. But this is just an example of how powerful these simple moving averages are. For me, aside from what maybe Rex offers with his unique charts, I really don't pay much attention to other technicals besides the 20, 50, 200 volume, RSI. That's all you need, really, in my opinion. They seem to work pretty well. So that's just an example of that working. All right, so let's take a quick look together if we missed any news coming in the last 20 minutes since we started our show. Let's see. Anything you can see DocuSign there, some news. All right, guys, that's all we got. So stay tuned. Thanks for joining us. We'll continue collaborating in the community and hope everyone has a great day.